Markets recover slightly after a two-day onslaught that saw enormous losses. Many fear a recession in the US is still imminent. What's driving the crisis and who bears responsibility for it? Is this the other face of globalization? This is Inside Story. Hello, I'm Jane Dutton. After 2 days of world panic over plunging stock markets, things seem to be leveling out. But how deep is the crisis? Can the United States avoid recession? And is the rest of the world doomed to follow? Well, the problems were sparked by record levels of default on mortgages in the US. Lenders in the States sold the debts onto banks worldwide, who then became wary of lending to each other and to borrowers. This so-called credit crunch, along with factors like the falling dollar and high oil costs, fueled the economic turmoil. On Tuesday, a steep interest rate cut from the US Federal Reserve shored up the American economy and helped some markets rebound. Well, many analysts see the American economy as both a possible source of a solution to money woes and a starting point for this global economic dip. They cite the US's influence on world markets. With an estimated yearly economy of more than $13 trillion, the US does have the world's largest. And the amount of purchasing and lending power it has helps drive other countries' economies. But while the US might have the largest economy, its economic growth is a fraction of other countries. China's a fast-growing market. It's the world's fourth largest economy after the US, Japan and Germany. India's economy is booming too. It's growing at almost double-digit rates yearly. And with Asian economies on the rise, it's possible global economic influence is shifting away from the United States. Well, joining our discussion today are our guests in Dubai, Monez Bazzi, an independent investment advisor and former Merrill Lynch's executive director. In Washington, D.C., Samir Dasani, director of 50 Years is Enough for U.S. Network for Global Economic Justice. Thank you both so much for joining us. Mr. Bazzi, this latest market volatility, where does it leave the much speculated worldwide recession? Is it still a possibility?
Well, thank you, Jane, for asking me on your program. I think worldwide recession is still premature to call it. We don't have a recession yet. We suspect there may be one.
What about the US?
I do believe that, well, they're not in a recession yet. They have to, I mean, we need two negative GDP numbers before we call it a recession. So technically, but we expect it to happen. But I think the action of the Fed is going to help in a way that if it's, it will be either a mild recession or, with luck, maybe we can avoid one.
Now, this shot in the arm package, it's not even 1% of the GDP. So can you see the impact in the short term, or will it be more a long-term measure?
Well, I think to a large extent, it's not the size of the program that's going to make a huge difference. It is really the impact on the investor psychology. Keep in mind, for months since last year, we've been hearing about, one bad news after the other in terms of it started with a subprime mortgage, then it spilled into the credit cards, then the banks, then the huge losses that the banks have been underwriting. Now we're worried about how it's going to spill over, from the housing sector to the financial sector. So all these, negative news have had a very bad impact on everyone. And so people have, consumers have slowed down their consumptions, worrying that if there is a recession, they may lose their jobs. And corporate executives are saying, wait a minute, before we start expanding, plans, let's, hold back a little bit and see how things develop.
Mr. Dasani, are you even more chipper?
No, I'm quite less chipper, I should say. I believe that we have developed a global economy which is dependent on mega consumption in the US and other places. And I think that consumption is not sustainable for all kinds of reasons. I think building up of the middle class in the US it really hasn't happened in the way that it should have. So that consumption that we have is not sustainable. It's based on borrowed money, and as we're seeing with the subprime mortgage crisis, which is really a bait and switch kind of con act, isn't it? I mean, you lure consumers in at lower interest rates than what they end up paying at the end of the day. And then they have to default. They can't pay those interest rates. So
do you think the Americans...
fraudulent lending going on.
Do you think they'll be able to pay their way out of this?
No, I don't think so. And I don't think, if we're looking for a sane, sustainable global economy, I don't think we should be even trying to answer that question. I think the question that we should be trying to answer is, how do we take this crisis? It is a crisis, whether it's a crisis tomorrow or a year from now or 2 years from now. It is a huge crisis that is going to erupt. How do we take this situation and make a global economy of a global middle class? How do we build up consumption in other parts of the world, other than the US, other than Europe, other than Japan? How do we actually fulfill the promise of development, which was started for many countries in the 1960s and which has been waylaid by institutions like the World Bank, like the International Monetary Fund, like the WTO? How do we get those institutions out of the picture and get meaningful development in Africa, in Asia, and Latin America, and development for the majority of the population and not for small minorities, as we're seeing, for example, in India?
Okay, Mr. Bazzi, maybe you can answer that. I mean, what are you advising your investors? What should they be doing with their money to help the situation?
Well, it's not a question of helping the situation. You have to, put things in perspective. The markets have had quite a run over the last 4 or 5 years. Since 2003 and until 2007, most of the developed markets have been, rising almost in an uninterrupted manner. And then if you look at the developing markets, such as India and China, China was up 100% last year, and India was, way over 65%. So what we're seeing right now is, I call it a correction, but a severe one, a very severe correction. I'm advising investors to, to stay calm, number one, but number two is focus on the fundamentals. As I think we all agree, the US is slowing down. How much is what's not clear yet. But the rest of the world, I believe, the emerging markets, Brazil, Russia, India, China, remain attractive, but one has to be careful with valuations. And so is the Middle East. The Middle East GCC markets, I think also offer a great opportunity for investors.
Mr. Dasani, how do you think this is going to play out politically if a lot of the people, particularly in the US, are short of money?
Well, politically in the US, it's going to be an interesting election year here in 2008. I think the economy will be a major issue in the developments that we see in the various debates and so on. I think the Republican programs of sort of eliminating taxes at all costs, may seem appealing. But on the other hand, those are the programs that are seen, and especially the actions by the former chairman of the Fed, Alan Greenspan, those are the actions that have led us to the housing crisis in the first place. So if we have a clever Democratic opponent going against whichever Republican opponent it may be, that Democratic opponent can say, look, it's the Republicans that have put us in this mess in the first place. If we don't have such a clever opponent, the Republicans may say, well, we'll just cut everyone's taxes and that'll make everything better. In fact, cutting taxes is not the solution, at least not the way the Republicans do it. There are better long-term solutions, such as increasing investment in public sector transportation, increasing investment in social services, especially healthcare. We have one of the most wasteful healthcare services here in the United States imaginable. So getting rid of some of these, extremely cost-inefficient services that we have here in the U.S. is one step that needs to be taken. But I think, again, at a global level, the whole global economy is tied to this U.S. mega consumption, and that's just not sustainable. That's going to stop, if not today, it's going to stop,
Okay, so what role then for the U.S. economy going forward? I mean, between them, China, Russia, and India make up 50% of global growth these days. So should we be looking elsewhere?
Well, we do care because at the end, the United States does consume a very large portion of the world production. So it is considered as an important client, number one. And number two, China and India and other developing countries are building up their consumption. So it's in the right direction, it's on the right track, but it's going to take time until it can compensate. Totally. But, back on the political and the liquidity front, I find it very interesting that while the developed world may be starved for liquidity and for cash, it's the developing world that has a lot of liquidity and cash. We've already seen them, come into certain institutions like Citibank, Merrill Lynch, etc. And I suspect that there will be more flows of funds, let's say, from the emerging economies into the developed economies. And it will also, once you're an investor, your voice, let's say, counts more, let's put it this way, than it would, it would normally do.
I mean, Mr. Bazzi, what do you make of Gordon Brown's suggestion for an early warning system? Do you think something like that could work?
I'm not sure I understood how he's going, his suggestion and how he's going to monitor that. I think it's important to keep track of, the big picture. We see fluctuations a lot every day, and those fluctuations, a lot of people get carried away with. It's important to step back, look at the overall scenario. We've had, fantastic growth over the last few years, slow down, can't forget that oil just touched $100. It's going to have impact. Commodity prices are rising. It's going to have impact. So, the economic cycle is at play. And as I said, it's important to keep track of where we are in the cycle and then take the measures, timely measures, to, to reduce the pain or to, reduce the impact of a recession or a liquidity crunch.
Okay, and as we're talking, world leaders and top economists are meeting in Davos deciding what to do for us. But this is what people from around the world had to say, particularly in India and China, about this downturn. Stay with us as we go into a break on this.
As per our opinion, to invest in this market, our market will be healthy, maybe in the future will go up.
It's not good because all the small investors are already deep in water. No one got the chance to buy in a lower market also, because all the brokers' machine was closed. It was no limit, they are saying, and not a people got a chance to come up.
We are very upset. Our whole wealth, whatever we have invested, is totally zero now. Lost by 50%. We are lost by 50%.
I'm here to see whether things are in the positive. I'll be so happy, but actually, I don't really know what I'm doing.
I think it's perfectly normal for the numbers to go up and down. You can't have your highs without having your lows.